good evening, or good morning, or afternoon, wherever you are. And explain this good sales that happen, right? Let me move all of that. Okay, yeah. Now, when you are trading, right, most of you, not even most of you, this what I look at what we call the left and the right hand side of the market, right? The left and the right hand side of the market. So now if you look at this left hand side, right, most times I would urge that you draw what we call rejection blocks, whereby, because after an expansion, if you look at example, let me show you something. Sorry. See, you have an expansion, you have a retracement. An expansion, a retracement. An expansion, a retracement. Now, for that retracement to happen, it must have reacted from somewhere. That's what people might not understand. For that retracement to happen, it reacted from somewhere. Right? It reacted from somewhere. And it's for this move to happen. So you can catch the expansion and to an extent also catch the retracement. The expansion, the retracement, the expansion, the retracement. Now the problem is catching a retracement is actually setting your take profit. Why? Because the retracement gives you multiple options, whereby the retracement can even stop at the breaker block. The retracement can come all the way to the other block, or the retracement might come all the way and sweep out the low. So the problem is, where can you set your take profit? Where is your safest bet to set your take profit? And how would you do that? Now, let me show you. So now I've given you a scenario about rejection block. Now, if you look at the gold on the 4 hour, and how do you know that rejection block is going to actually make that market retrace? I'll show you. Now, if you look at gold on the 4 hour time frame, right? There's a rejection block here. There's another rejection block here. Beat the ball every day, kilo bees, no they tire. Every day you come in move fair. There's something around here too. There are multiple. You can see them multiple times. There's another one here too. Multiple times. But let's look at what I played out, right? Now, let's look at these two scenarios, 1 and 2. Right? 1 and 2. 1 and 2. I don't want to use one under. I don't want to use this particular guy here. Let me use FXCM. Sorry, Forex.com. Okay. 4 hour time frame. Okay, let's use this. Yeah, this is better around here. Good. Let's look at the scenario where it works and the scenario where it doesn't work. I can bet you too. I can bet you that there's also another zone here. Now mid-market fail. I can bet you that there is actually a zone there that mid-market fail. Yeah. Example, if you look at it from this place, you have 1, right? You have 2, right? So this guy is even liquidity. So you don't even expect market to even sell from here on a structural basis. So what do you expect market to fall from? The other block, right? That is this one, or maybe an FVG, FVG. So somewhere around here. So those are two likely scenarios where you can expect the drop, right? The question: what do you do when that drop wants to happen, and how can you take advantage of that drop, right? I want to look at a scenario whereby price doesn't obey the whole thing. Let's say perhaps actually just use this guy. Maybe you're just marking all the breakout blocks on the other side, right? Because okay, gold is bullish right now, yeah? Gold is bullish right now. So let's look for rejection blocks that can cause a retracement. Now, where do you now go to? After I have spotted these rejection blocks on the 4-hour or the daily time frame, right? Most times I use only the 4-hour and the daily for all type of stuff. You won't see me go to the 1 hour because you see everything on the 1 hour. You see rubbish there. So now 4-hour, the and the daily time frame, right? These are two time frames I use for that. Now, when you make a price touch those blocks, right? I think I was okay. Make a price touch those blocks. Let's look at a pattern scenario. This is what I wait for. I've seen it on the 4-hour time frame. Then I go to the 5 minutes, mostly the 5 minutes, right? The 5 or the 15 minutes, right? Once price touch it, my bad. Once price touches it, right? Price just touch it. Boom. You don't know center, no, because price can actually go above it. It is not expected to use it and fall all the time. But I wait for a character change. That means price does something like this, right? And it breaks to the downside. This gives me like, if I see like first break, second break, and mock setting. If I see one break, and to an extent, I won't enter until I see that second break. I am not interested in it because if it does one break to the downside, it can also say it wants to just sweep the downside and continue buying, right? So it's actually I don't use the word gambling. You're actually taking a higher risk. Yes, you're taking a higher risk, waiting for only one break from the rejection block. Only one break. If you're waiting for only one break, you are taking a higher risk, right? So me personally, I would advise you wait for 2 breaks, one and the second one. Then the third one I can come here, can I use to fall it. Now that is the concept of that is the concept of confirming a rejection block, right? Now that is the easiest part. The hardest part is setting the take profit. Now the question is where. If you're going to ask me a question now, perhaps, I wanted to say my name right now. Where are we going to take the TP for this trade, man? You'll be asking, where? You can say, some people might say, price can actually want to use the breakout block to continue the buy. Price, I want to use the order block to continue the buy. Price might even use an order block around somewhere here to continue the price. Price might even come on the way and sweep this low and buy from this order block around here. Yes. So there are multiple places to actually look for, right? So the question is where? Now I'll give you a solid answer. Where? This is your answer. The safest place whereby you will take profit 85% of the times from a rejection block, right? The safest place for you is the 50% zone. The zone that tells you that the zone that can make you differentiate between a discount and a premium zone. Your aim is to sell that market from the premium zone all the way to the discount zone. Not looking for it to go all the way to the other block. Yeah, most times you can do that, but there's a high chance it doesn't do that. Example, I'll show you live example on gold, whereby price did not even come to the other block. It just used the premium zone to continue its movement. Now, how do you mark? Sorry, the discount zone. How do you mark it? You take your Fib retracement from the low, the lowest low, to the high. See, the lowest low to the high. This 50%, is where your take profit will be. This 50% is where your take profit will be. So those of you looking for my this is my settings. Screenshot it. Okay, I think that is more. I start and this coordinates visibility. I don't think you need that, but this is your share. Right? Your 50% is where you're looking to close out, because your selling price. As soon as you have seen your confirmation somewhere here, your aim. You have seen your confirmation here. So this is your block, right? You have seen your confirmation somewhere here. Then me, after I draw that 50%, I just draw a line at the 50% and I delete it. So I already know that, okay, let's say we have not seen anything. This is where I'm going to sell this market to. If I see confirmation at this block, so once I've seen my confirmation, I take a short all the way to this point as my TP1, the realistic TP. Same thing goes for here. This is the low, the lowest low, and this is the high. So if I see a confirmation around here and I want to sell this market, I'll be selling all the way to the 50% zone, right? Same thing happens here. I'm looking to sell all the way to this point. That is everything you need to know about this. I'm literally saying everything I know though. Alright, so let's look at example. Chart example. This and this is going to work. Let's say perhaps you know nothing about this. Okay, there's actually a rejection block here also. Right? Let's see we're marking all the rejection blocks. So let's see, because I've not actually backtested this, but I just know this. At least you just know, right? I just know this, right? Let's just go to the 15 minutes time frame. Now we have spotted 4 rejection blocks so that you can see possible retracement on hold from, right? Now let's see if confirmation printed. If it did, how would we have entered? That's the next question. So price has eventually gotten here, right? Have you seen anything out of the ordinary? I would say yes, I have seen. Did you see? I don't know. Me, I have seen. What did I see? I'll tell you what I saw. On the 15 minutes, let's go to the 5 minutes so it will be clearer to you. You just need to see that first 2 breaks to the downside to confirm that trade. There's nothing more about it. So don't even wait, am I in the right side of the market? Yes, you can go. Okay, I don't think I can go back. Okay, this should be it now. Yeah, this is the first one. On the 5 minutes time frame, price has eventually touched here. Okay, what are you noticing? You can notice up, down, price is still moving perfectly well. Up, down, up, close the wick, giving you a sign, no problem. Down, it has done its first movement for you. You are contemplating at this point. This is more or less like an up, down, second break to the downside. It broke this guy and also broke this guy. Good, this is all I want. This alone has confirmed. Let me tick in this guy. I'm coming. This is the zone. So let's tick in this guy so we can see it clearly. Right? Can see that? I've seen break here 1. Right? Break here 1. Break here. This is break here 2. Well, now this is also break here 2. So anyone you want to do is on you. Right? So after your break of structure, the first pullback liquidity. Now this liquidity over here is for you that don't know anything about single candle inducement, because people that have information about single candle inducement would mark here as their liquidity. If you don't have information about it, go and get information about it. Or you come for mentorship. If I say that, you say I want your money. I want your money, yes. Hey, don't be lie. Give me that money. Give me. So as I was saying before, yeah. But let's keep it to this. For most of you might only know about this. You can see this trend and liquidity over here too. So this guy actually a better point for those of you that are seeing visibly. This is where most of you might actually use, but no problem. Let's do as if I didn't even say this. Let's do as if we did not say that. POI, which POI are we going to use? On the 5 minutes, the POI is this breaker block here. Yes. But you know, it's a long trade. So I'm actually just come to the 15 minutes to actually look at it again. Yes, that's how I do sometimes I do like that. Alright, on the 15 minutes, yeah, this exactly. Can you see? This is what you can see on the 15 minutes. On the 15 minutes, the POI is okay, right? The POI on the 15 minutes is more or less like this type of guy here over here. So it's this other block. Here's the 15 minutes POI, right? So I might just extend it to this body, right? Now that's where you can take that shot from. The question is, where's your TP gonna be? That's the most important part. Where's your TP gonna be? Now, you know, everybody, I think I had this type of trade, I don't remember. Everybody might have a TP around here. Yeah, this guy here is a solid liquidity point for you. This on a normal day, yeah, without looking at whatever I was teaching, this here is where I'll put my TP. Yes. But now it's okay, right? Eventually went there, but that is not the safest point, and we both know that. Yes, actually, price could actually reverse, could use here to buy, but it didn't. But what is the safest point for you? I'll not even lie to you. This is the low, right? This is the high. This here is the realistic point for you to close that trade. Here, not here. Over here, you're just speculating that price is going to come to that liquidity level, which is not wrong, because price moves to liquidity. But over here, this is your first point of. This is your most realistic point, and it's still a good arrow at the end of the day, right? Let's try and actually see if we took that trade. How many arrow will we get? How many? See, if there's even liquidity over here for you too. What's this? Look at it. Short. My bad. One to nine. Let's make it 1 to 9. Over here, it's going to be like 1 to 10 now, but realistically, although I might even make it a 1 to 8. Exactly. Realistically. Over here, TP is okay. Realistic point. By looking at rejection blocks, I'm not going to really talk much. Over here, this and another solid POI where we can see rejection on gold from. Now let's go to the 5 minutes. The 15 minutes first. Let's see if we can see anything on the 15 minutes. Maybe we see something. You know, price was entering the POI. Up, down, up, down, up. Do you see any character change around here? No. Price did not change character. Assuming price broke to the downside, then we start looking. But it didn't. It just, so it's not as if, oh, everything was work. When you enter there, you wait for confirmation. Let's go to the 5 minutes. Maybe might say, oh, it's using 15 minutes now. The 5 minutes, he did not use 5 minutes, so it's trying to, come on, bro. 5 minutes, up, down, up. Oh, this guy did not do anything. This is more like weak, bro. Weak. Up, down, up. This guy did not get broken. This is your second break. So I told you, oh, wait for the second break. Second break is the most important to you. Because why? On the 5 minutes now, you might have seen a week here. A week. Weeked out. Oh, weeked out. You were already thinking of shorts, yeah. Oh, you're already thinking of a second break. This year is a second break, yes. But I won't come here and say, nah, this is my second break. So at this point, when something like this would have happened, I'll be anticipating price to come here to break before I think of continuing the sales. The price ever come there? No, it didn't. It Tuesday and it bought. And this was only visible on the 5 minutes. On the 15 minutes, it was not even visible. Right? Good. So you can see this guy did not work out. So it was wrong. The next rejection block. 5 minutes. Let's see if we'll see confirmation. Up, down. Up, down. Up, down. Broken the first one. This is the main guy for you, right? Well, it didn't come there. Broke to the upside again. Up, down. Oh la la. Down, down, down. Down, down, down. 15 minutes. Down, down, down. 15 minutes. Was there any clear? Was there any clear type of structure? Yeah, it was clear on the 15 minutes. It broke here, broke here. So you already know that, yeah, price is gonna break. It's gonna actually do that, right? So if I draw my fib, this is the low, this is the high, right? This is my realistic target, right? This is my realistic target. Note, and I say note because I mean it. Sorry, yeah. Note, if price has reached your target and price reverses up to the upside, and maybe it did not touch your POI before getting to your target, as far as it has reached your target, your POI is of no use anymore because it has gone to the discount zone. So you can now buy. Do you get that? Get that through your head. As far as it has gotten to the discount zone, your POI that I failed to touch before moving is invalid. So we have seen our targets over here already. This is our target for this trade, right? So let's check if maybe price was grateful to us. 15 minutes, 5 minutes, we will be out to look for the sales. So what I'm looking for now? I'm looking for, yeah, this is the break. This guy is the first pullback, visible one, right? Yeah. So me personally, I'm looking for buyers from here. Maybe cover this with POI 15 minutes to check if the POI is looking better. 15 minutes time frame. I'll cover it all the way up here. 15 minutes time frame showing me this guy. The 5 minutes showed us some more skin, some POIs over there. Yeah, this whole POI was I've used. The 5 minutes all the way to the 15 minutes POI is what I covered. Because 5 minutes might work. If you say you want to use only 5 minutes small one, price might take you that 5 minutes on and eventually use the 15 minutes on. So why don't you combine them? We are flexible over here. Flexibility. Are you flexible enough? Yeah. So when price broke here the second time all the way down here, yeah, I would have expecting price. I didn't know that price will not come up there again because you see that volume. Gold is not coming back to retrace for you, right? But I cannot teach that here. No, I will not teach that here. I will not teach that here. Why? Because that's not what I'm here for. This here. Perhaps you only know about this rejection block knowledge. You don't know about trading volume, like trading gold momentum volume 4. So you trade it. I don't know about that PS. I don't really know much about that PS, right? But gold, when gold is falling with volume, it's the way you trade and enter the continuation. But nah, I can't say that here. So this will have been a good setup for you if price were to be lenient enough to come up here. This will have been a realistic target. I can see when price reached the target, from there it bought to the high. It bought to the high, oh, it bought to the high. So you have taken this. Yeah, you not have taken this because there's nothing for you. There's nothing for you. This is the third guy over here, right? Let's see. 15 minutes. Okay, let's go 5. Let's go 5. I think this is the one we call. Yeah, this is the one we call. This one I visibly call. Price is in the rejection block. Up, down, right? Up. We are thinking. Down. Down, down, down. This is more or less like the down. No. This is more or less like the down over here. If you see this is the down, this is the up. So this is the first break and this is the second break. Yes. But it's not visible. This is 5 minutes. It's not visible on the 15. So let's just see. Price coming all the way up here. Now this one is valid for the sales. Yes, it is. Yes, it is. But if you go to the 15 minutes time frame, I don't think you'll see that first break there. Okay, it's visible on the 15. Can you imagine? So yeah, actually valid. Yeah, I didn't actually know that before. I didn't actually see that on Friday. Did you imagine? On Wednesday, sorry. Can you imagine? So the first break was here, second break was here, right? So automatically, I can go to the 5 minutes now and look for the structure. Because me, I was actually waiting for the second break around somewhere here. I didn't actually see it. I don't want to lie to you. And eventually, when price did the second break, the second time, that's when I look for entry to sell. Although I had the first one there, so yeah. But I was taking a higher risk because I don't even know that this is even showed up. So the first break here, I'm glad that it's actually printed itself on the 15 minutes time frame and 5. If I see a print on the 15 and 5, I have more confidence on that trade. All right. Why am I calling this guy a break? You know, this is the high. This is the low. It was going up. Oh, yeah, it was going up. It's not creating like more. It's like a weak low. This is more like a weak high. So it broke it and it broke second phase. So that is automatic. So automatically, this guy's liquidity, right? This guy's liquidity. Let me explain that. This guy's liquidity, you know that already, right? I don't need to explain that again to you. Let's put this here. So automatically, you know this rejection block is going to work, right? So where's your POI? The POI is 5 minutes of the block. The POI is a 5 minutes of the block. 5 minutes of the block. Maybe you don't want to take risks. No problem. The 5 minutes of the block is your POI. 5 minutes of the block is your POI. Me, I had that entry around here because the next day I didn't actually believe in this break there. So after I saw this one, I waited for the second break to be broken. That's this guy, right? Once I saw that guy, who was my POI? Now on the 5 minutes, I had these guys because this is the break here. Yeah. Sorry. This guy here was a break to me. This guy was liquidity to me. I see where I got messed up was I was a greedy guy. See my POI. On a normal day, if you know me, you know that I will cover everybody. Because POI it's okay. This POI is okay. Yeah, maybe. Yeah. This is on a normal day. And it pained me because I sent this straight to the VIP. It pained me because I had this, right? I don't know, like I was done this, giving the extra space. Me, if you know me, I do that a lot. I give space, right? Now this is the second entry, and this was the first entry over here. Did I post this trade on Twitter that I caught it? Yeah, I did. I think I did. All right, 1, 2. But I'll accept the fourth. This was it here. But I re-enter this trade again because I know that this gun is going to be used. Alright? But why did I even re-enter this trade from? Yeah, I remember. Once I saw this over here, I was already sure that okay, price is going to break to the downside. this would have been my first re-entry, but I was not really interested. I was really angry that how come I did this type of rubbish. I did not cover the high when the POI was okay. So I think I re-entered around somewhere. Go where did I re-enter? Where did I re-enter? Yeah. After I saw this break to the downside, this could have been my first entry, the order block, but I didn't choose it. Instead, I think I used this. Hey, I forgot where I entered from. I think it was this guy. That price fell to the downside, came up a retracement type of vibe, right? I think this is where I entered. I'm not sure. Then I now used the 5 minutes order block again. This guy. Right. Obviously, I know that this order block cannot be come back to because that's been mitigated. So this was the fresh one over here. So I think I entered around there. So this was more or less like a third entry. Sure. Why this trade pained me was I only sent this one to the VI. I like trading like one time a day, right? And over there, just to manage risk. And I sent this. I did not send this just to manage risk. I didn't want to. I was angry, to be honest. Because over here, I wouldn't use a much lower risk on my proper account. I use a much lower risk because I was just angry that I did something like this, bro. To be honest. So you now, question is, you already have these trades. Where do you want to close them? So you now go to your higher time frame back, right? You go to your higher time frame back. You remember what I taught you, right? What I taught you. This is the low of this trade. This is the high. This is the high. You already know that because of me. Your horizontal line. Most times I just draw horizontal line. No, I don't use horizontal line. I use what's this guy? I think they call him horizontal ray. Where the hands here? I will mark it out. Sorry, how can I get this off? Oh. This is your first take profit. Although some people haven't. Let me not talk about that. That's your main take profit over here. So you are following that market already, right? You're following this market already. I was my guy. He was buying gold. I told him, oh, guy, this guy won't sell all the way to this place. He no believe. He no believe because he's a very good trader too. He no believe, man. Until I eat TP. Until I eat TP, now you believe me. I not tell you. So this was TP2 and this is TP3. Right? So you can see. Yeah, here. They see him. They play the show. Nothing to do for him. See him. Right? See him. That is a realistic target. And you can see when immediately price touch the target, you started buying. 50% is your realistic target. It's because your aim is to reject price. You are balancing price from a premium zone to the discount zone. That is your aim at that point in time, right? That is your sole aim. You are balancing price. So that's how those trades came about. So let's put the topic there. Rejection blocks. I just name this rejection block because price retains a rejection there, right? There might be a real life name for it. I don't know. Now I think I just observe with that. So this is something that you might not learn on a normal day, but you know, somebody gotta tell you some points. Rejection with belief, exactly, not the past. With belief. Rejection with belief. That is it on gold. Like that's it. So where I might think, let's do some analysis on this pair. Rejection was used here. Some people actually thought price would actually come down here in this pair very well. So over here, it looks like this price he wants to come down. He's giving signs that, oh God, I won't fall down a little bit. I won't say what I know because me, I just take like that. So let me not say what I have to say. rejection will believe. So that is it on rejection blocks. I hope you learned something valuable in this class, and believe your own analysis. If you see buy and I post sell, take your buys, because that's what you can see. So trade what you see, not what you feel, and believe in your own analysis. Bye.